Hey guys, today we're going to be looking at where I think Tesla stock is headed. Before we continue, remember, these are my own opinions. This is not investment advice. I'm not certified in anything financial, and you should do your own research before investing in any company. I started investing in Tesla a few years ago, but just got into it because I thought Tesla was cool. I never really thought about the value or where I thought it would go. Now I'm trying to be more disciplined in my investing, and I've started trying to make models and look at the long-term prospects. All right, so Tesla just announced their Q3 earnings, upgraded almost all of their cars, and started rolling out the FSD beta in the past few weeks. So I've made several changes to my model. There are a lot of assumptions baked into this and a lot of guesses, but I'll walk you through it. So let's go. To orient you, the orange cells are the ones that I've filled in myself, and the white cells are just the output. The purple ones are just notes for me to see what the growth is year over year. So starting with shares, there were about 937 million shares floating at the end of Q3. Looking at the growth rate in shares over the past few years, I'm estimating there will be 942 at the end of this year, and I've just continued that growth rate with it slowing down over time. And I also tried to factor in Elon getting his 101.5 million shares by 2025, though they won't really become floating until 2025 at the earliest. Last year, Tesla made about 20 billion in automotive revenue with about a 20% gross margin. So far this year, they've brought in about 17 billion with a 25.5 gross margin, which is impressive. And I'm estimating they'll bring in almost 27 billion with a 25% gross margin for the whole year. From there, I'm expecting a 30 to 40% growth rate over the next 10 years, except for next year. So where am I getting these numbers? Well, Tesla's already delivered 320,000 vehicles this year, and they're on track to deliver at least 460,000. I'm pretty sure they'll try really hard to reach their target of 500,000 vehicles this year, and they'll probably come really close, if not exceed it. The average selling price this year has been a little under 54,000. By the end of this year, they'll have the capacity to build 890,000 vehicles. Their shareholder deck says their current capacity is 840,000, but in the earnings call, they said they'll reach about 890 either by the end of this year or early next year. They're also building 3 new production lines in 3 separate factories on 3 different continents that are scheduled to start producing vehicles next year. So even if they only utilize 90 to 95% of their current production capacity, they have a path to produce and deliver close to 1 million vehicles in 2021. From there, I'm just estimating a 40% growth rate through 2030 because they're ramping up Model Y right now, which is expected to outsell the Models S, 3, and X combined. They're going to have the Cybertruck and Semi ramping up next year, and they'll be announcing 2 new cars in the next 3 to 5 years, both at much lower price points. At Battery Day, Elon told us about the $25,000 car coming in about 3 years, but he's also told us that Shanghai and Berlin will be making 2 separate original cars. I know Gali and others have been calling the next car the Model 2. I'm calling the next 2 the Model 2 and the Model M. Comment down below if you can guess why. I have the average sales price decreasing, but tapering off at some point, because even though the average price of the hardware will be low, the FSD package will probably be over 15,000 to 20,000 by that point, which will help boost the average sales price and the gross margins. Leasing revenue was 869 million last year. I don't really know how to model it, so I'm just having it grow at 7% each year and slowing down after the Model 2 and M are released, and keeping the same gross margin every year. Given the revenue is so low, it doesn't really affect the numbers too much. Energy has been slow and the solar roof was delayed, but it looks like Tesla has finally figured it out and is figuring out installation logistics. I figure they'll make about the same amount of revenue this year and then start to scale between 20 to 35% over the next 10 years. Batteries are still a huge constraint and cars are the priority, so even though solar can grow quickly, it's questionable how much storage can scale. I added a line item for ride-hailing just to factor it in. Elon expects the FSD rewrite to be fully rolled out by the end of this year. ARK has been asking Tesla to start a human-driven ride-hailing service within the next year. Given what's happening in California with Uber and Lyft, I expect Tesla to wait before jumping in. Instead of having an active human-driven ride-hailing service, I think Tesla will launch a supervised autonomous ride-hailing service. With this, owners would be behind the wheel, but mainly to supervise the car as it drives autonomously. That way, they'll still comply with regulations, which probably won't be changed very soon in the next 2 years. But they can still have their network gathering more data and improving the system. And instead of paying people to supervise their FSD cars, they'll just be earning revenue from the rides and the owners will still get paid. I initially had them launching it in late 2022, but seeing the videos from the FSD rewrite in action, I pulled the ride hailing into 2021, late 2021, just because it looks impressive. Margins will probably be low initially, but once regulations change and Tesla figures things out, they'll improve drastically. And that's what I'm modeling over here. For this, I've assumed they start the service at the end of 2021, earn about 5% of what Uber got in ride-hailing revenue in 2018, and then they scale quickly. The market size is projected to be about $175 billion by 2025, so I'm saying they grab about 5% of that in 2025. Uber and Lyft's gross margins were between 40 and 45%. So I'm modeling that they'll be below that for the first 4 to 5 years and then improve it dramatically. It's probably a poor assumption, but I'm just going to keep it for now. Services and other revenues have had a negative gross margin for a while, but Tesla has been working on that. So far this year, they've had a negative 13.5% gross margin. So I'll just model a negative 14% gross margin for the year, with it improving over the next 10 years. So all of that leaves us with $31.8 billion in revenue this year, growing to $969 billion in revenue by 2030. That's about a 40% compound annual growth rate over the next 10 years. Elon's also said he expects Tesla to grow at 40 to 50%. I think he was talking about just the automotive business, which would make my estimate very conservative. But even if he meant the entire company, I can see a path to achieving that. And even though 40 to 50% growth rate sounds high, Tesla is actually really small, despite all the press coverage. So they have a lot of room to grow. To orient you here, the white columns are the estimated future values, while the blue columns are the present values. For my base valuation, I'm going to use a price-to-sales ratio of 4. Tesla's not a traditional automaker, so I don't think it's right to use other automakers as comparables. I think using other tech companies makes sense. Alphabet's price-to-sales ratio has stayed between 4.8 and 7.5 over the past 5 years. Amazon's has been between 2 and 5.2. Apple's has been between 2 and 8. Netflix's has been between 5 and 14. Uber's has been between 2 and 6. And Facebook's has been between 6 and 18. Tesla's price-to-sale ratio is currently around 14, so I don't think it's unreasonable to expect it to drop down to 4 over time. Using the estimated revenue we looked at earlier, I get an estimated market cap of $787 billion in 2025 and $3.8 trillion in 2030, with a share price of 763 and 3,247 respectively. I'm using a 20% discount rate right now, which is intentionally high, so my present day price target is $524. I've also looked at the valuations based on estimated net profits and discounted cash flows, but those came out much higher than this, so I'll stick with this one since it's a more conservative number. Based on the current share price of $429.95, that gives me an estimated yearly return of almost 22.5%. Even with a PS ratio of 3, the price target would be $2,436, resulting in a close to 19% yearly return. How do I compare to other estimates? Well, ARK Invest previously had a $1,400 post-split 2024 price target. They'll be revising that soon. Dylan over at Electrified showed a possible $3,000 2030 price target, valuing only the automotive business. I'll link his video down below. Piper Sandler has a $2,300 price target. These are, of course, some of the bullish estimates, but I'm also bullish on Tesla, and I'm glad to see my numbers are not far out there. Based on everything so far, for me, Tesla is undervalued only if I'm planning to hold the stock for at least 5 years. If my time horizon was less than 5 years, then Tesla would look very overvalued. So what do you think Tesla is worth and will be worth in the future? Did I miss anything? Comment down below and let me know. I'll be making models on several other companies, so subscribe if you want to see those videos. By the way, if you open an account with Webull and deposit $100, you'll get 2 free stocks worth up to $1,600 each. And if you open an account with Robinhood, you can get a 3rd free stock. Referral links are down below. Until next time.